Hello everyone, and I welcome you back to a new session of this channel. Our today's topic is related to journal entries with traditional approach, and also we would cover cash transaction versus credit transactions. And in this traditional approach, we have to study what is real account, nominal account, and personal account, and how we journalize them with practical examples. Before understanding journal entries, we have to understand what is cash transaction, credit transaction, or bank transaction. A cash transaction shows involvement of money in that particular transaction. Suppose I purchased a car. When I purchased the car, I paid the money to supplier. This was a cash transaction. Credit transaction. This is in the term of credit. Suppose I purchased the car, but I did not pay him. I did not pay the supplier on that spot. I would pay him after 1 month, 2 months, 3 months according to credit terms. These are the differences between the both. We understand this better with the help of examples. Withdrew cash for personal use, $8,000. You went to the bank and you withdrew some money from your business account. They give you the money. The bank give you the money. This was a cash transaction. Cash deposited into the bank. You took some cash and went to the bank. Here, this is the involvement of cash. Goods sold to Tom for cash, $5,000. You sold something to Tom and he paid you. That's why this is a cash transaction. Paid salary by check, $3,000. You paid some money, but it is by check. You did not pay directly the cash. Then who paid? The bank paid. That is why this is a bank involvement. This is not a cash transaction. Sold goods to Sarah on credit, $9,000. You had some goods and you sold them to Sarah, and Sarah would pay you in the future, not right now. That's why it's a credit transaction. Now we start the practical examples here. Somu commenced printing business with $50,000. Here we find the two affected accounts. The one is cash account, the another one is Somu's capital account. Now we are going for the rules. Cash is a real account, as we see here. Cash is a real account, and Somu's capital account is a personal account because this is a person. Somu's capital is related to person. What is the rule for a real account? Debit what comes in, credit what goes out. Here cash comes in, hence we have to debit this one. And for Somu's capital account, it is personal. Somu is the giver. Here Somu is separate from the business. Why? Because earlier in accounting concepts we particularly found that a business entity is a separate individual from his owner. Hence, if Somu is the giver, he is the credit. So how goes the journal entries? We are having the particular format or specimen. Date, particulars, LF, ledger, folio, debit, credit. Cash is debit. 2. It is in the format. We have to include 2 in here. 2. Somu's capital account. This is a credit. The amount of debit must equal amount of credit, 50,000 and 50,000. And the narration is Somu commenced business with capital. The example 2, bought goods for cash, $4,000. This is a cash transaction. 2 accounts are affected. And what are those accounts? One is purchases account, another is cash account. Because when you purchased goods, you paid something for those goods. Here the goods is not clear. What is that good? We don't know. This is a furniture, this is raw material, or whatever it is. Because of that, we gave them a particular name, and that is goods, because it includes everything in that. So we take purchase. Why? Because here we don't know goods are sold or purchased. That is why we take the event behind that goods. Here it says bought goods. If we found this as sold goods, then here instead of purchase we would have select sale, Because this is bought and this is a purchase, we take purchase. Another is cash. As purchase is a nominal account, sometimes the purchase is also as real account. We will explain it in the future that why it takes the shape of a nominal account and how it takes the shape of a real account. So for now, purchase is a nominal account. Expense made, because we made some expenses. When we purchased goods, we paid some money. That's why this is an expense for the business. And about cash, cash is real and cash goes out. What was the rule for nominal account? In nominal account, debit is all the expenses and losses. As we had expense, that's why we go for debit. It means then purchases debit, and how about the cash? Cash is real and it goes out from the organization. That's why it is credit. And how is the entry? Purchase account debit to cash account credit, and the amount is $4,000. And how about narration? Cash purchase made. This narration says as that you purchase something, and for the transaction to be completed, you paid money for that things, goods you purchased. Here we have the illustration 1. This says Anand is a trader dealing in textiles. For the following transactions, pass journal entries for the month of January 2018. As Anand is a trader in the textile industry, she is having some transactions for the month of January. We have to journalize that. These are the transactions. Commenced business with cash, purchased goods from X and Co on credit, cash deposited into the bank, bought a building from L and Co on credit, cash withdrawn from the bank for office use. We see the answer and solution for this question in next slide. Now we journalize these transactions, and the first transaction is commenced business with cash $70,000. Here two accounts are affected. The one is Anand's account, another one is cash account. Instead of Anand, we can also take capital account, the only capital account, but you can also combine Anand's capital account. In these two accounts, Anand is personal account, as this is a real person. Another one is cash account because cash comes to the business. What is the rule for personal account? First of all, Anand is the receiver or the giver. Anand is the giver because he gave some money for business. That is why, what is the rule? Debit is the receiver and credit the giver for personal account. Here we have credited Anand's capital account because Anand is the giver of money. Another one is cash. Cash is real. We look only from a standpoint of the business, not from person. Here the cash is coming in the business or going from business. Cash is coming in for the business. That's why cash would be debited, because the rule says debit what comes in, credit what goes out for real account. Here cash comes in, that's why we have debited for $70,000, and we said earlier that debit must equal credit. Purchased goods from X and Co on credit, $30,000. Here the two accounts are affected. Goods or purchase account, another one is X and Co company account. Why we took purchase account? Because the event is purchase. If the event was sale, then we would have taken sale here. And why we not take goods as account? Because goods would include many things there. It could be a chair, a desk, or something like printer, whatever it could be. That's why this is not one thing. And for that reason, we take only the event behind those goods. And here the event is purchase. That's why we took purchase. Here we made some purchase, and purchase is sometimes nominal account and real account, but 90% the people assumes this is a nominal account. Here purchase account, and this would be debit or credit. We are coming to nominal account because purchase is nominal account. Here it says debit all expenses and losses, credit all income and gains. When we purchase something, this is an expense or an income. This would be exactly an expense. That's why here we take purchase account debit. $30,000, and X and Co. X and Co is the receiver or the giver, as this is an artificial person and the rule is same for real person and artificial person. Here X and Co is the giver, that's why it would be credited as $30,000. Cash deposited into the bank $40,000. Two accounts are affected, bank account and cash account. Bank account is a personal account, artificial personal account. Here the bank is receiver or the giver. Bank is the receiver because you took some money to the bank. Hence the bank would receive that money. That's why bank is debited. And who is credited? Cash. Cash is real and cash goes out from the business. That's why it is credited as $40,000. Bought a building from L and Co on credit $95,000. Here building account is there, land and co account is there. Why cash is not there? Because this is a credit transaction. Building account would be as debit. Why? Because building account is real account and it comes toward our organization. That's why this is coming. It would be debited. It would be debited. And L and Co company is the giver. This is artificial person and the rule is debit. The receiver credit the giver. This is giver. That's why it would be credited. The narration is building bought on credit. If it was for cash, we would have narrated as building bought for cash. Last transaction, cash withdrawn from bank for office use. This is for office use, not personal use. That's why cash is involved and bank is involved. Cash would be debited because we took something from the bank and brought it in the company. That's why it has come to us. This is a cash transaction and this would be debited. Another one is bank. Bank is artificial person and it is giver for $5,000 and the narration is cash withdrawn from the bank for office use. This illustration is a little bit longer. J.S. Lee is a sole proprietor having a provisions store following all the transactions during the month of January 2018. Journalize them. Here it says journalize them. These transactions are there. We have to journalize them. The first transaction commenced business with cash $80,000. Two accounts are affected, cash account and J.S. Lee's capital account. Cash comes in to our business or goes out. Cash is coming in. That's why this is a real account and what comes in should be debited. J.S. Lee's capital account and here J.S. Lee is the giver to business. That's why she would be credited. Another transaction, deposited cash with bank $40,000. Two accounts are affected, cash account and bank account. Here cash comes in or goes out, cash goes out and this is a real account. That's why it would be credited and here we credited that one. Bank is the receiver or giver. Bank is a personal account, artificial personal account and bank is receiver. Here we debit this one. Purchase goods by paying cash $5,000. We purchase something. That's why goods purchase account, cash account. Why we do not take goods only? Because goods include lots of things. That's why we take the event behind that and the event is purchase account because we purchase something and cash account. Purchase is an expense for us because this is nominal account and when you have expenses that would be debited and for receiving those goods we paid some cash. That's why cash goes out as it here we see this is credited. Purchase goods from Lepton and Co on credit $10,000. Here why we do not take cash? Because here we took cash, but why we do not take the cash here? As this is a credit transaction. We did not pay on that spot when we received. That's why we would pay Lepton and Co in the future. So purchase account, goods, because the event is purchase, we took purchase and Lepton and Co account. Here purchase account is debited. Why? Because this is a nominal account and every expense would be debited because the rule says like that. And Lepton and Co is the giver. This is an artificial person and this is giving us all those goods. That's why this would be credited. Sold goods to Bob and received cash $11,000. We had something and we sold it to Bob. Here two accounts are involved. The one is goods, another is cash. And what is the event behind that? Event is now sales. This is not purchase because we sold something. So here cash comes in or goes out because we sold something to Bob and Bob paid us $11,000. That's why cash comes in to our business. And here goods are sold. This is sales. Sales is nominal account. So when we made some sales, we had some gains. That's why this is a nominal account and your gain is credit. That's why sale is here credit. This is continuation of that particular example. Paid salaries by cash $5,000. Two accounts are affected, salary account and cash account. What is salary account? Salary is nominal account and this is an expense for our company. That's why debit all expenses and losses. Here we made debit and for 5,000. What about cash? Cash goes out because we paid salary to A, B, C, D employee. That's why cash goes out and this would be as credit. Paid Lepton and Co. by check for the purchases made on 4th June. On 4th June, we had some purchases from Lepton and Co. and the amount was 10,000. Here they have not mentioned because the amount is clear as it is $10,000. Two accounts are affected, Lepton and Co. account and bank account. Why? Because this transaction was made by check. Here we see check is here. That's why when the name of check is mentioned, it means that you did not pay. Your bank paid instead of you. So two accounts are affected here. One is Lepton and Co. Another one is bank account. Lepton and Co. is artificial person and it is receiver. That's why it would be debited and the bank is giver. This would be credited. The both are personal account but artificial. One is the receiver, another one is the giver. Bought furniture by cash $4,000. You went to the market and purchased some furniture and the amount is $4,000. When you purchase furniture, furniture comes in and this is a real account. That's why this would be debited. And for purchasing furniture, what you paid? You paid cash. Cash goes out. That's why it is credited. Paid electricity charges by cash $1,000. Here two accounts are affected, electricity charges, cash account. Electricity charges is nominal account and this is your expense. That's why it would be debited. Cash goes out from organization. This would be credited. Bank paid insurance premium on furniture. You paid some insurance to an insurance company as per standing instructions, $300. Two accounts are affected, insurance premium and bank account. Insurance premium is a nominal account and this is an expense for us. That's why insurance premium would be debited as this is an expense. And to bank account, why? Because this was transaction of a bank. Here we see bank paid. We did not pay. When bank paid, this is a bank transaction and bank is an artificial person and this bank here is the giver. That's why giver is always credit in the eyes of personal account. That's why this is credit and insurance premium is debit. We have lots of narrations. You can see and read it. Insurance premium on furniture paid. You can select these narrations according to that particular transaction. If you want to see overall view of your transactions, we had 10 transactions in that month of January. For whom? For Geosley's account, and this would be the complete format of your journalizing. And you can see here we had 10 transactions and this is the specimen of format starting from date, particulars, ledger full use, debit and credit, and always debit must equalize credit, and you can see every debit is equal to credit. As usual, I hope you learned something from this video, and if it is yes and you really learned something, do not forget to like, share and subscribe, and also not forget to press that bell icon as you will receive my next video when it would be uploaded. Take care and bye bye.